Like any stock, Tesla has had periods of rising and sliding value. The carmaker saw a 45% decline in stock price in 2022 following gains of almost 50% in 2021 and an astounding 743% the year prior. The stock price has experienced significant market pressure as a result of multiple unconnected elements evaluating its performance, which has led to a drop in the share price of the company. I'm sure you clicked because you want to know more about the company's future. More importantly, though, I know you did so to find out if the 90-year-old Warren Buffett's close friend and vice chairman of Berkshire Hathaway, Charlie Munger, thinks the stock is ready for investors to buy now, or if they should wait to buy given the stock's apparent weakness. Thus, please continue to watch, hit the like button, and subscribe. Recently, Tesla shares, along with almost all tech and growth stocks, surged substantially higher after the CPI indicated that inflation was abating. Tesla's stock increased by nearly the same amount during that session as the Nasdaq, which surged 7.3%. However, Tesla's excellent growth story and performance are overshadowed by Elon Musk's continuous spat with Twitter, so the business has yet to capitalize on this gain. A prominent investor recently complimented Tesla for its outstanding accomplishments in the electric vehicle sector and quick expansion in an interview with CNBC. Charlie Munger expressed his optimism about Tesla and how he believes it surpasses expectations in a recent interview. Munger recently hailed Elon Musk's Tesla as a remarkable achievement for the U.S. auto industry. With a market valuation of more than $600 billion as of January 2022, Tesla has risen to become one of the most valuable firms in the world despite Munger's doubts. Tesla produced 1.91 million cars over that period. The carmaker built 386,759 automobiles in the first 2 quarters of 2021 and delivered about the same quantity, 340,300 vehicles, in the third quarter of 2022. For the September quarter, the automaker's revenue increased by 55.95% to $21.454 billion. In comparison to the same period previous year, Tesla's revenue during this period increased by 59.8% to about $75 billion. Elon Musk, the CEO of Tesla, has made noteworthy contributions to society, according to Munger's study. Musk has stated on record that the auto industry's acceptance of Tesla is a small miracle because there hasn't been a profitable new automaker in a long time. As an investor, Charlie Munger has a stellar track record. Still, the financial guru cautioned that the economy was in danger because some people were living in what he called cool wretched excesses, and forecast that the stock markets were in significant difficulty earlier this year at the Daily Journal's annual conference. Munger clarified that venture capital and other private equity types were oversupplied. The markets for Bitcoin and GameStop at the time were also important contributors to these excesses. He continued by saying that prices are rising globally at an alarming rate across a number of purchasing categories, and that most consumers are finding that they are paying more on commodities than they were a year ago. The Federal Reserve increased its benchmark interest rate by 0.75 percentage points as of October of this year, marking the third major hike in a row, to 3.25%, based on the 12-month percentage change in the Consumer Price Index. Investment bank Morgan Stanley recently published a note regarding Tesla in which it stated that although Musk's ownership of Twitter would influence the opinions of certain customers, any subsequent decline in Tesla shares might offer investors a chance. With the Twitter deal and other issues impacting the shares, Tesla's market value is currently less than $200 billion. According to Morgan Stanley, the primary reasons for the high valuation of Tesla shares are investor confidence and their capacity to project the company's core energy storage and electric car companies' economic prospects, which is bolstered by a positive economic environment. According to the study, although it might be hard to estimate the precise effects this could have on Tesla shares, investors frequently worry about it, and it has lately been put to the test. In terms of car production, delivery rates, earnings, sales, profit margins, and technology, Tesla has strong foundations. It's uncertain when the company's stock will be able to soar to new heights, though, as it has been trading below $200 recently. According to Morgan Stanley's research notes, a poor public image of Tesla may have an effect on consumer demand for its goods. Despite having a high degree of vertical integration, Tesla nonetheless depends on a number of business alliances. Negative effects on investor confidence, money availability, the automaker's connections with government agencies, and popular support are all possible. Tesla's primary source of funding is domestic, but in order to industrialize renewable ecosystems and advance onshore battery research, it must work closely with sovereign entities, namely in China and the United States. For the time being, in order to realize the growth that its $600 billion market valuation indicates, it will need to keep up its strong relationships with the investment community. The investment firm also presented a negative case for Tesla's $150 stock price, speculating that the company may test the $150 bear case before the year is out due to possible mood concerns and slowing EV demand, especially in China. Additionally, Morgan Stanley stated that Tesla will seize any chance to cut production costs in order to pass along savings to customers in the future. Given that its China team made a comment regarding the recent, notable price reductions in that market, it is believed that Tesla may keep lowering car pricing. As a result, it anticipates price reductions in Europe once Tesla's Giga Berlin reaches a production level of 5,000 units per week. A self-funded top-line grower such as Tesla could trade at roughly 12.5 times EV/EBITDA, or earnings before interest, taxes, depreciation, and amortization, and 23 times P/E on Morgan Stanley's 2025 forecast. Tesla is well positioned to benefit from the re-architecting of the U.S. renewable supply chain at scale. Tesla is capturing a sizable chunk of the quickly expanding electric vehicle market in terms of both market share and profitability. Apart from the rise in demand, Tesla is also figuring out how to efficiently meet this need, having previously disclosed that the average cost of materials and assembly for one of their cars is $36,000. They sell for at least $10,000 more. In contrast, the minimum weekly waiting period for all Model 3 and Model Y automobiles has been lowered by the company to 1 week. Fans of Tesla will be happy to hear this because the wait times have seriously hurt sales. Demand for the company's electric vehicles, EVs, will rise as wait times decrease. In Q30 2022, Tesla delivered 8 times as many automobiles than Toyota did, yet the latter still posted a $3.29 billion net profit. This indicates that not only is Tesla leading the electric vehicle market, but it is also steadily overtaking all other automakers in the globe in terms of market share. Regarding Charlie Munger's Tesla allegations, what are your thoughts? Tell us in the comments section and check back for additional developments. If you enjoyed the video, click the like button. If this was useful to you, please subscribe. See you in the upcoming video. Music. Like any stock, Tesla has had periods of rising and sliding value. The carmaker saw a 45% decline in stock price in 2022 following gains of almost 50% in 2021 and an astounding 743% the year prior. The stock price has experienced significant market pressure as a result of multiple unconnected elements evaluating its performance, which has led to a drop in the share price of the company. I'm sure you clicked because you want to know more about the company's future. More importantly, though, I know you did so to find out if the 90-year-old Warren Buffett's close friend and vice chairman of Berkshire Hathaway, Charlie Munger, thinks the stock is ready for investors to buy now, or if they should wait to buy given the stock's apparent weakness. Thus, please continue to watch, hit the like button, and subscribe. I'm sure you clicked because you want to know more about the company's future. More importantly, though, I know you did so to find out if the 90-year-old Warren Buffett's close friend and vice chairman of Berkshire Hathaway, Charlie Munger, thinks the stock is ready for investors to buy now, or if they should wait to buy given the stock's apparent weakness. Thus, please continue to watch, hit the like button, and subscribe.